Have you ever wondered how Bitcoin prices move and what influences these fluctuations? The answer lies in its very nature. Bitcoin, as many of you know, is a decentralized currency. This means it doesn't have a central authority like a government or financial institution controlling its value or supply. Instead, its price is determined by the market, influenced by supply and demand dynamics. When more people want to buy Bitcoin than sell it, the price goes up. Conversely, when more people want to sell than buy, the price goes down. But it's not just about buying and selling. Bitcoin's price is also affected by factors such as regulatory news, market sentiment, technological advancements, and macroeconomic trends. Predicting these movements, however, is not a straightforward task. It requires a deep understanding of various analysis techniques and a keen eye for market indicators. In this video, we will explore the different techniques used to predict Bitcoin price movements. One of the most common techniques used to predict Bitcoin price movements is fundamental analysis. Fundamental analysis is like being a detective. It's about looking at the bigger picture, unraveling the complex web of factors that affect the price of Bitcoin. It involves evaluating the overall state of the economy, interest rates, production, earnings, and management. These factors may seem unrelated to Bitcoin, a decentralized digital currency, but they can influence the price in ways you might not expect. Take the economy, for instance. When the economy is doing well, people tend to invest more, and this includes Bitcoin. A booming economy can stir increased interest and investment in Bitcoin, driving up the price. On the other hand, in times of economic uncertainty or recession, people might turn to Bitcoin as a safe haven, which can also boost its price. Interest rates play a role too. When interest rates are low, traditional investments like bonds or savings accounts become less attractive, and people might be more inclined to invest in riskier assets like Bitcoin, potentially driving up its price. Then there's the matter of production. Bitcoin's production is capped at 21 million coins. As more Bitcoins are mined and the supply decreases, the price can rise due to scarcity. Earnings are another factor. If companies that accept Bitcoin as payment report good earnings, it can boost the legitimacy of Bitcoin and potentially increase its price. Lastly, let's talk about management. Bitcoin is decentralized, but its development and maintenance are managed by a community of volunteers. How well they manage issues like scalability, security, and upgrades can affect confidence in Bitcoin and, in turn, its price. Fundamental analysis is not about predicting exact price movements. It's about understanding the various factors that can influence the price and making an informed prediction based on that understanding. Fundamental analysis provides a comprehensive view of the factors that can affect Bitcoin price. Another technique used to predict Bitcoin price movements is technical analysis. Picture this: a grand chess game where the board is the market and the pieces are the price and volume data. Technical analysis is akin to studying the moves made in past games to anticipate the next move. It's all about patterns and trends, and how they can help us forecast future price movements. The heart of technical analysis lies in the belief that history tends to repeat itself. The market's past performance is examined meticulously to identify certain patterns, known as signals, that have previously led to specific outcomes. A critical part of this process is the analysis of price and volume data. A third technique used to predict Bitcoin price is sentiment analysis. So, what exactly is sentiment analysis? In the simplest terms, sentiment analysis is the process of determining the emotional tone behind a series of words. It's used to gain an understanding of the attitudes, opinions, and emotions of the people involved in a discussion or a situation. In the world of crypto, it involves gauging the mood or sentiment of investors from available data. This data can come from various sources such as social media posts, online forums, blog posts, and even news articles. Now, you might be wondering, how can the mood of investors influence Bitcoin prices? Well, the answer lies in the psychological aspect of trading. Investors, like all of us, are human beings with emotions. When investors feel positive about the future of Bitcoin, they are likely to buy more, which can push the price up. On the other hand, if investors feel negative or uncertain, they might sell their Bitcoin, which could cause the price to drop. However, it's important to note that sentiment analysis is not about predicting the exact price of Bitcoin. Rather, it's about identifying trends and patterns that could hint at future price movements. For example, a sudden surge in positive sentiment might indicate a potential price increase in the near future. Conversely, a spike in negative sentiment could signal a potential price drop. But sentiment analysis is not just about looking at the overall mood. It's also about understanding the reasons behind these sentiments. For instance, if there's a lot of positive sentiment because of a recent technological advancement in Bitcoin, it might have a stronger and more lasting impact than positive sentiment due to a temporary market trend. In short, sentiment analysis provides a unique perspective on Bitcoin price predictions. It adds another layer to our understanding of the market, allowing us to see not just the numbers, but also the human emotions and attitudes behind them. Sentiment analysis provides an insight into how the emotions and attitudes of investors can affect Bitcoin prices. While these techniques can provide useful insights, it's important to note that predicting Bitcoin prices is not foolproof. Indeed, no matter how advanced or comprehensive your analysis is, the volatile nature of Bitcoin and other cryptocurrencies makes it challenging to predict their prices with absolute certainty. This volatility is driven by a myriad of factors, some of which are beyond the scope of traditional analysis techniques. For instance, while fundamental analysis considers the underlying value of Bitcoin, it can sometimes overlook the impact of unpredictable events. These could range from sudden regulatory changes in influential markets to unexpected technological breakthroughs that could shake up the entire crypto ecosystem. Similarly, technical analysis, with its focus on historical price data and trends, may fail to account for the emotional and psychological factors that drive market movements. Fear, greed, hype. These are human elements that can cause drastic price swings and are often hard to quantify or predict. Sentiment analysis, while it attempts to gauge market mood, can also be limited. It's based on the premise that investor sentiment impacts price, but it's not always clear-cut. Plus, sentiment can change rapidly, and it's nearly impossible to accurately measure the sentiment of every participant in the global Bitcoin market. Moreover, none of these techniques can completely account for the unpredictability of global economic and political events. A sudden crisis, a new policy, a surprising election result, these can all send Bitcoin prices soaring or plummeting, despite what the analysis might suggest. In the end, all these techniques are tools to help you make informed decisions. They can provide a roadmap, help you spot potential trends, and offer insights into the factors that may influence Bitcoin prices. But they are not crystal balls. They cannot see the future with perfect clarity. Remember, while these techniques can guide your investment decisions, they cannot guarantee success. So always do your own research, stay updated, and never invest more than you can afford to lose. Considering the volatility of Bitcoin, it's crucial to take certain precautions when investing. Bitcoin, like any other form of investment, requires a strategy. Having a well-crafted plan can protect you from unnecessary risks and maximize your profits. One of the most fundamental tips in Bitcoin investment, or any investment for that matter, is diversification. No matter how promising Bitcoin seems, it's never wise to put all your eggs in one basket. Diversifying your portfolio across different assets reduces the risk of losing everything when one investment doesn't perform well. So while Bitcoin might be a part of your investment strategy, it shouldn't be the only component. Another crucial point to remember is to only invest what you can afford to lose. The world of cryptocurrencies is highly unpredictable. While there's potential for immense profit, there's also a possibility of significant losses. It's important to keep in mind that the money you put into Bitcoin should be surplus cash, not your life savings or emergency fund. Keeping up to date with Bitcoin news is also essential. The value of Bitcoin is influenced by a myriad of factors, from regulatory changes to technological advancements, and even public sentiment. Staying informed about these factors can help you make more educated decisions about when to buy or sell. Finally, it's important not to get swept up in the hype. It's easy to get caught up in the excitement when Bitcoin prices are soaring, but remember that the cryptocurrency market is notorious for its volatility. Prices can plummet just as quickly as they rise, so it's important to stay level-headed and stick to your strategy. Investing in Bitcoin can be rewarding, but it's important to approach it with caution. By diversifying your investments, only putting in what you can afford to lose, staying informed and keeping a cool head, you can navigate the unpredictable world of Bitcoin with confidence. Predicting Bitcoin prices involves a blend of different analysis techniques. We've journeyed through the ins and outs of this intricate process, starting with fundamental analysis. This technique considers Bitcoin's intrinsic value by examining factors like supply and demand and the overall health of the market. Next, we delved into technical analysis, which uses historical price patterns to predict future movements. We also explored sentiment analysis, a technique that gauges market sentiment to predict price changes. But let's remember, these techniques have their limitations. There are no guarantees in this volatile market, and Bitcoin price predictions should never be taken as absolute truths. It's crucial to exercise caution and always diversify your investment portfolio. By understanding these techniques, you can make more informed decisions in your Bitcoin investment journey. Until next time, stay savvy with your investments.